Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the week and how we can plan for a better trade for the next day. And this is analysis that's for the week that's starting tomorrow, Monday, June 6th, 2022. So let's get in the charts and see what we have. This is the Nifty 50 and the Banknifty charts that you see here. So weekly, if you see, it's a gap up that you can see on Nifty. It ended green, but it has got a long wick size and looks closer to a hammer pattern. The wick size indicates that there is huge resistance on the upside, but the gap up indicates there is there is bullishness also from the previous week or this week's beginning, you can say, right? So it's a good bounce up of nearly 6 to 7%, and then it felt the resistance, and then it just raised a little bit. And that's the weekly charts that you're seeing on the Banknifty. It's a little bit different. What you see here is almost not really a piercing pattern. Then this red candle, if it had gone a little more down to the middle of this previous green candle, then it would have become a dark cloud bearish candle, right? And I'm sorry, that's not piercing pattern. Piercing pattern is it's opposite of the dark cloud cover. So dark cloud cover also, this is not really that, but almost closer to that, because it has gone up and retraced substantially downside, but not to more than 0.5% of the previous candle. So that way it's a bull trap, right? It's bearish in nature, but here you have a gap. So overall, if you see, Banknifty is showing more bearishness, trapped in the bulls. Banknifty is where the bulls got trapped in the previous week, you can see. But Nifty, it did not get, there was no bull trap there, the weekly candle wise, if you see, but you can see that the selling pressure is very much there. Look at the daily channel, so the entire mess up happened in the last day, right? So it was a V-shaped move that if you see it daily, you had green candles, then red candle, then moved out, took a bottom base at the support zone, and then bounced up, but could not face the resistance. So it's a V-shaped bull trap is what you see there. So the daily candle, the last candle, is clearly similar to the weekly candle of the Banknifty. So it's also a dark cloud closer to that. Little more further down, it will become a perfect dark cloud. So it's bearish pattern that you see. And look at the Banknifty. It's clear bearishness that has happened on Friday. Big sell-off, and it's a bearish engulfing pattern. It's engulfing not just the previous candle, not just the previous candle. It's almost engulfing the entire previous 3 days of candles, all inside that big red bearish candle. So you can see there is some kind of support that you have. It's a small gap. It's taken a support there, close the gap, and taken a support zone. So this gap area, it's actually covered. So there is also a chance of a change in polarity. It has taken a bounce from a previous resistance zone from where it had dropped out, and then that resistance is now kind of a support. So in case there is a move that is happening on the up, there is a potential chance of consolidation, at least, and the change in polarity bounce up move also is possible on the Nifty. Nifty has got a very good support down because the gap is unfilled below at 16,370. It's unfilled. So that could form a very good support zone. If that breaks, we need to worry, right? Remember, we had a volatility divergence on the Boltzmanns. If you consider here, we had an outside inside bar, and then a W pattern formed, and then a breakout. But that breakout is not sustaining, right? Even Nifty, Banknifty also, it's a W pattern, double bottom, and then taken this up, made the bottom below, and then it just tried to break out. Really did the breakout, but after 2 candles, it just gone weak and then raised and then taken a support. But yeah, so very short term is what daily candles are. So that way, if you look at it, it's bearish. It has certainly turned bearish with the big down move that has happened on Friday. All right, but weekly in the medium term basis, if you see, this is exactly what happened. Both are contrary. Right? There is good retracement and selling pressure that you can see, but more bearishness is seen in the Banknifty in the medium term. That's what you see. Another view of that Nifty and the Banknifty is on is what you see here. So you can also see that there was a flag and pole kind of pattern breakout that was expected here. Here also there is a triangular flag and pole pattern that was expected to break out, but that did break out. It went up and then could not sustain, go and retrace back. So it's a failed flag and pole consolidation breakout is what you can see. That's another thing. And also immediately above this you have a confluence of moving average resistance, both the indices. And it is closer to that resistance, so it's going to be a big test. And above that you have a gap resistance also on both the indices. So clearing this zone of 17,500 and 37,500 is going to be a Herculean task, right? Because that is where you get cleared of all the major resistance. Until then, you never know what is going to happen. It could clearly take a previous swing low and then make another swing low, lower low pattern. No, it could go down and break this 15,650 thing that we are hoping that would be a support zone, and could break that and make another swing low and then come up. It's also a possibility. But until we have this confluence resistance that's there on the upside, that's cleared off, we have a lot of things to worry. Let's get to see what exactly happened. So it's 1.4%, and so it's a 1% nearly, 1%, 1.5% kind of down move that has happened on a weekly basis, right? With big selling pressure that can be seen, right? And the patterns that you see is nearer to a inverted candle and nearer to a dark cloud, right? But it was a bull trap on Banknifty on the weekly basis, that's for sure. And the short term, it was also nearer to a dark cloud, but bearish engulfing bull trap was there in both. Bearish engulfing on the Banknifty was very evident. V-shaped flag pattern. We saw all this on the chart. So basically, there is a lot of bearishness that is hovering around on the very short term. But remember, there is also a small, not small, a good gap support. That's the downside for 16,370, and if that breaks, then you may have things to worry about. That's what we've already seen. Bollinger Bands, this is what you see, right? Bollinger Bands is actually consolidating. The bands moving sideways after having expanded. It is now started to go up and expanding on the upside, which also indicates that the price is above the median, and then volatility is slowly expanding on the upside, and then it felt the selling pressure, right? So the expansion towards the downside is arrested and done with, and it's sideways with the bullish bias is what Bollinger Bands are still conveying to us on both the indices, right? Moving ahead, look at the support resistance levels. So immediate support that we can see, the first one would be the 16,550, 16,650, that's all. If that breaches, then 16,350, 16,450, which is also a Fibonacci 50 retracement level. If that breaks, then we come to 16,100, 16,200, which would have some previous support. Then 15,850, 15,950 would be a major because it's a Fibonacci 60 unit retracement from the top. That breaks, it goes to 15,500, 15,650, and then previous swing low 15,450. That's 15,650, the previous swing low. Lower low formation can happen if it breaches that. That's the downside support. On the upside, if you look, immediate resistances would be 16,700, 750, that zone, and then you have 16,800, 16,900, which is a Fibonacci 38 retracement. Above that, you have the psychological rounding number of 17,000 to be cleared, right? That's the that is clear, then it can go to 17,200, 300, 17,350, 450, and then back to Fibonacci 23, which is 15,500. So 15,500 cleared means it would have also cleared a major resistance on the top side, gap resistance, right? And this gap is still not filled. What you see down here at the 16,370 level, until then you have the support of the for the Nifty. Now look at the Banknifty. Also, it is marked that there is a flag pattern, failed breakout that has happened. Banknifty coming to that, the first support would be 35,600 to 35,900, that zone, and then this is not a support, it's a resistance. So 35,600 and 35,900 is a resistance. After the Friday sell-off, it's a mistake to have mentioned as a support. It's a resistance. So that's the first resistance, and above that you have 36,300 and 36,800, so 38 resistance. Then you have the resistance that has to be cleared above 37,500. That is when we can think about any further bullishness to continue. Similarly, downside, the first support would be not at 35,600, 900 zone, it would be at 35,000, 35,300. It's a Fibonacci retracement level. That is breached, then 34,350, 34,750 is first zone of support, second zone of support, and then below that We have 33,600, 34,100, which is Fibonacci 61, which would be major support zone, because right, you have a previous small swing low that has happened at 33,000 level also, right? And if that is breached, then you go back to the 32,150 level, which is a major swing low that has happened below that, but it not went to that level earlier before it bounced up. So making note of this support and resistance levels on the charts of both the indexes. Moving on to the momentum and the trend analysis. So what you see here is a sideways momentum that you can see on the short-term charts of the Nifty. Right? And flat side, it's a flat momentum. It's not rising. No? It's a flat and it's sideways. But on the weekly and the medium term, you can see that it is, it is maintaining the sideways, and it is a rising momentum. So overall momentum is kind of hovering the sideways flat levels on Nifty. Banknifty also the same, sideways, and it's a little falling. Otherwise it's a little flat and rising in Nifty, but Banknifty is showing the momentum is slightly falling as compared to the Nifty. So but it remains that it is in the sideways zone. Momentum is in the sideways zone. That's between 60 and 40. That's where it is ranging between, right? And it is slightly bearish. Bearishness is there, and the momentums move in the Banknifty. No divergences are seen since it is in the sideways zones. And if you look at the trend indicator ADX, you can see that it is DMA positive in the bullish. Right? In the bullish zones, it is ADX indicator is showing that it is in the bullish zones. It has crossed over last week. So the strength of that bullishness on the daily, this is on the daily we're talking about, it's flat. Right? It means it's not a rising bullishness that you see, because it's a big sell-off that happened on Friday. But the weekly and the medium term, if you see, it's still bearish. The trend has still not changed to the bullish zones. And although the trend of bearishness that is there in the medium term is not that great, it's falling. That strength is falling. Probably a crossover may happen if the price for the more subs. So trend indicator shows short-term bullishness that is maintained this week also on the Banknifty. On the Nifty, on the Banknifty also it's the same. It's crossed over to the bullish zones on the very short term, the daily charts, right, with a rising trend. So trend is better as compared to the Nifty in the Banknifty trend, but momentum is weaker, right, in the Banknifty as compared to the Nifty. That's how it is. So weekly time frames, it's still, the trend has still not changed on both the indices, right? So things that you have to keep a note of. So there is sideways momentum and the bullish trend that you are seeing in both indices on the short-term daily charts. This is what we're talking about. It's the momentum charts that you're seeing. The momentum RSI, you can see that it's hovering in the sideways with a small bend, and it's a small flatness or a falling strength you can see on the Nifty. And Banknifty also you're seeing a falling strength. It's a small bend of the momentum, but it maintains a sideways zone basically between 60-40. That's nearby levels. And the trend indicators ADX, if you can see, it has crossed over, but the strength of the bullishness in the short term is not that great because it's falling. This has to take a turn and then move up, that green indicator of the ADX or the DM. Right, so DMI negative positive is what you see. Right? That's what we discussed. Moving on from the price patterns, volatility, price patterns, and the momentum and the trend indications that we get, we got to study the volatility. This is very important, right? So volatility can be studied from the Bollinger Bands. We already seen that it is showing clearly sideways volatility, but the India VIX is saying it is further dropped to 7% last week. If you could look at the numbers, it's just close to the 19.9, so it's very close. And previous week also it has fallen more than 7%, I say. And so overall bullishness, the VIX is really cooled off, but you have to be still cautious because it's not very far from the 20 levels, which is considered to be the end point of the high VIX zone, right? So open interest analysis, the next thing that we have to look at. The open interest of the Nifty on the futures is very interesting. It's contrary. It's not contrary, but not exactly the same. So it's a short beta, but definitely the Banknifty because of the huge engulfing pattern that has formed on the daily charts. Futures open interest is a build up on the last day, right? But Nifty, it is showing bearishness only, but it is a long unwinding, not a short build up that has happened yet, right? So that's the open interest data on the futures open interest, and the options open interest data is for the next weekly expiry, that's on June 9th, Thursday, right? So we'll be seeing that levels in the next slide. But before that, the put call ratio, the number of puts and calls that counts, indicates that there is 0.0 7.4 is not that bullish enough on the Nifty, and 4.5 is bearishness. So put call ratio on the options open interest is showing there is slight more bearishness in the Banknifty, and then Nifty is not that doing great with respect to bullishness, is what we can understand, right? So open interest in the sell. Let's see what other additional things it can give information about. Although the VIX has fallen off, the OI build-up is showing that there is a lot of resistance, right? There's a lot of call writing that you can see, right? Which is more than the put writing that is there in both indices. You can see the same, right? Let's see the level 16,300 to 17,500. That's nearly 800 points. That's the range where the highest put and call writing is in. That's where the option writers are seeing the support and resistance levels at that much level. But remember, we have 3-4 days of more trading that has happened on the weekly expiry before we get more clarity on this. But as of now, it's a wide range. It's the option writers think that it may hover between 16,300 and 17,500 as of now in the next week. Second level of highest put and call rating is 16,500 to 17,000, right? So nobody is thinking that it is fall below the 16,000, right? So the range is the same between 16,300 and 17,000. 16,000, 17,000 is the zone that you say that. And 35,000, 36,000 point range is where the option writers are seeing highest put and call rating, and 34,000 and 36,500 is where the second level of highest put and call rating support and resistance is seen. And put call ratio bearishness for the Banknifty is more. We already seen that. Now short buildup was also more bearishness in the bank. So Banknifty in the short term shows more bearishness of the options OI data also, and levels is what you already seen. Match up these levels with the chart levels that we had seen for the on the support resistance slides earlier, right? These charts has to be correlated with the options levels, and then we have to take the call accordingly. Moving on, the sectoral analysis, if you see the IT sector has moved up after big 30 to 35% of correction that has happened on across all the stocks in the IT sector because of the Nasdaq correction, US market corrections. Now it has turned, it's kind of reverting back, and it's close green with nearly 4.5% up move that you can see the last week. But still the momentum is sideways in the short term. It's not yet in the bullish zones, and medium term still remains in the bearishness. So it's a long way to go before we can take any confident bet on this on the long side. Metals also closed green last week. It's 2% up move that has happened, and the momentum is still sideways, and and the medium term momentum is sideways on both the time frames. So sideways movement is what you see metal. We'll have to wait for that to get up into the bullishness. But right, last week was up for the IT and the metal, and we have flat closing that has happened in auto and FMCG last week, which were these two sectors which were holding up when all the other sectors were falling earlier, auto and FMCG. That closed flat. Both of them maintained the sideways movement. The pharma dipped, and IT metal, along with that, reality performed. Nearly 5% of up moves happened, and it maintains a sideways movement. So reality, metal, and IT sector has shown good comeback last. And auto and FMCG, it's kind of sideways, and pharma is having trouble, short-term bearishness and medium-term bearishness. So pharma is the most weaker sector that you're seeing as of now, sector-wise, if you see, right? Previous week, pharma has turned bearish on momentum on both time frames, and nobody has gone to that kind of bearishness other sectors, right? So sideways is what you see in auto, FMCG, and metal, right? And reality also. So right, so big up moves happened in the IT, reality, and metal last week, right? So we cannot see any bullishness yet, and even in the short term in any of the sectors. So the Nifty 50's momentum sideways or price action sideways continues to be there in the IT sector. In the sectoral view also, that's the same. We'll have to wait for that momentum to catch up before we get to it. So, but weak sector is identified definitely clearly is pharma, right? Recovering sector is IT, right? And flat kind of thing, and main clear sideways, neither there, neither here kind of move is happening, not on FMCG. That much is very much clear, right? Yeah, so these are the charts of the sectoral analysis that we talked about in the previous slide, right? So IT sector, we can see that it's a clear bounce up from after forming a handle on the weekly, and it is still not climbed to the bullish zones, not even sideways zones on the medium term chart. So we'll have to wait for that, but looks like it's going to revert back. Metal also has taken a very good support and it's not ready to break down from here. Any breakdown from here could be worry on the medium chart. So this momentum also has taken on RSI 40 support, and clear consolidation continues to be there after a failed breakout that happened on the weekly charts. Auto sector, if you see, it's having some selling pressure. It's an inverted hammer, so it may be a trend reversal. Remember, it was consolidating just like the metal for a long time, and it has gone very good momentum the last several weeks when all the other sectors were doing bad, and it was trying to break out. And then up ahead you have a 2017 resistance that's going to be a major hurdle to recover. That's maybe the resistance that you can see beginning from here also. So any long bells would come in only in case we are able to clear this previous closer 2017 resistance that you see on the medium term charts. Momentum is sideways, continue to be there on the medium term. Pharma is where the weakness we have seen there. It is breaking down. It's in the channel, and it looks like it is taking a support temporarily on the interim support. It has breached the major supports on the top, and now it may be heading down to the support that you're seeing down very far now. So you have to keep a close watch if this momentum is getting down to the bearish zones further. As of now, it's bearish on momentum on both time frames. So from CG is in good position, similar to auto. Some selling pressure is seen by the inverted candles on the medium term, but you have good support zone there. Momentum is hovering in sideways just like auto. Reality is not ready to break down from the neckline of the breakout of the cup and handle. So seems like it has completed the handle part and then consolidating before it can wait for a time where it can bounce up and make another big breakout up. So that's what you can expect from the reality, right? Index heavyweights, Nifty index heavyweights are look at the charts. Big up move last week happens, and it trapped a lot of bulls on the HDFC, right? But it has moved clearly the momentum in the sideways. Long way to go up further. But in the case of HDFC, it is still facing resistance even to clear the resistance that's there immediately above. So we can talk anything further about this only if it closes above this resistance on 2477. Now moving ahead, you have so Reliance is showing clear bullishness. You can see there's a cup and handle handle formation ended up, and then it did a good bounce up to make all-time highs, but not sustained fall down, but taken a very good support at the previous neckline of the cup and handle, and then bounced up again. And it looks like the candle is clear bullishness. That's what made the market last week, right? Momentum is still not in the bullish zones yet, but this candle is wide range bullish candle, and clearly another new all-time high is expected to make, probably after a little consolidation that may happen here. So one of the few heavyweights that were bullishness is clearly evident. Index heavyweights, what do we have, right? Infosys and TCS, right? Infosys, two IT stocks. IT is recovering, and so is the two IT stocks, Infosys and TCS. Both are showing bullish candle, and TCS clearly having a wide range bullish candle and close comfortably above the major support zone from that slipped. Both are showing hammer patterns. Hammer patterns are often reversal of trend. Remember, this is on the weekly candle that we are seeing. So recovery in both the two heavyweights are hopeful. ICICI Bank has given a good bounce up along with the market and clearly closed above the previous support zone from where it had slipped down, and from further here it's facing some distance and it's closed with a small body bearish candle. Remember, the momentum is in the sideways in the medium term, right? So the bounce happened from the ascending triangle neckline breakout zone, right? And the next one in the heavyweights is Kotak Mahindra Bank. Kotak Mahindra Bank, you can see that it was performing very good in the last several weeks. For 5 weeks it was showing clear bullishness uptrend, and it in fact closed above the support zone also. But right there at that, it's facing resistance at the same exact place, and it has fallen down and then given up all the gains, right? So some selling pressure has happened. Profit booking could be that, right? So, but otherwise the trend has been consistently multiple weeks bullish news are seen. Although it's overall, on a monthly basis, if you see it's consolidated, that's happening. But clear bullish news are evident when the market it took a support and then bounced up. But now we'll have to see whether because the momentum, if you see the weekly, it's taken exactly at the 60. It has taken a bend. That means clear selling, profit booking, selling pressure is seen in the Kodak band. So Reliance the star. IT is recovering, right? And banks are trying to climb back and retain the lost glory, right? That's exactly what you see on the index heavyweights. Moving on to the institutional participation, the Fyers, you can see the last week the selling was not that great. That's exactly why the market did not fall big, right? You see, Fyers turned out to be net buyers also, in fact, and DAs did not buy that much, but since the selling from the Fyers had reduced a little bit, it was able to maintain equilibrium, right? That's why the market did not fall. That's what happened last week. But the fact that Fyers has non-stop selling continues every single day, it's a worry, continue to be a worry. Derivatives also, it has moved down on the FI. Institutional participation is what we saw. Going on, the US markets are down, right? We'll be seeing that it's not much, but it's clear resistance that to go further up of a big bounce that has happened. Look at this. This is the Dow Jones, this is the Nasdaq, and this is S&P on the down. So these are three major indices in the US markets. You can see that very good bounce, a big wide range mega moves have happened on the Dow Jones and the S&P 500 and Nasdaq also, and it has climbed from the bearish zone suddenly into the sideways zones. Very good momentum, and now and everyone is watching whether it will climb back the previous resistance zone from where it had slipped. All of these three indices, it is exactly facing resistance, selling pressure, profit booking, whatever, at exactly the same zone from the previous support. So this is a very dangerous situation. So there is a possibility that a change in polarity bounce on the downside could happen because the previous support is acting as a resistance, right? Same everywhere, it's a big danger. There is a probability that change in polarity bounce can happen, and then it can bounce down, it can fall down, all this. And so what you need to, although the momentum is climbed back, it is not settled on any support on the momentum yet, right? So if this works out, and then from here, if it moves further up above the previous candle high on a weekly basis, then it's a very good sign. It will be a range shift of the momentum, which is powerful, as you can see on the charts. So we'll keep a close watch on what's going to happen on the US market. So if there's a change in polarity bounce on the downside, it's going to happen. It's going to kill our markets as well, right? We're going to lose a lot. But it could be, it could be knocking on these doors before we can break an up move, is what I feel like. Right? So you cannot get any clarity at this point unless and until the price moves above the previous. This previous support zone has to be conquered back. That is what we have to keep closer watch. At the pre-market, then you get a clue what. So, as I say every time, if there is a big up move that happens normally, it would immediately reflect in our market also on a daily basis. We are talking about, right? But if it's a small or flat sideways moves that are happening, market will take the cues from something else, not in the US market. But that's how it is. It works on the impact of the global markets on our markets, right? Crude oil, this is the danger zone. The worst thing that is happening is this. Crude oil is shooting back to 118 plus levels, right? 118 plus 0.56, and then it's heading towards another 13-year or 15-year kind of high levels, and there is no cool off that's happening here. Already it has been maintaining that level since very long. 110 plus or 100 plus levels has been maintained since several weeks together, and now it's not even consolidating. It is trying to break out and take out the previous resistance, previous all-time high levels. So once again, that's what it looks like. So which is not good for our markets also, right? When the rupee is weakened this much, dollar is rising, and then crude oil is also rising, means it's going to be terrific task for us to maintain the balance in the economic aspects. Look at gold. Gold has been consolidating. They are taking a good bounce up last week, previous to last week, and seems like it's consolidating and finding some selling pressure at the place where it had slipped out from. So anytime it is able to close a green candle above this major resistance on the upside, which is major support for the breakout, if that happens, then you can expect the gold to rally. But as of now, with very flat momentum is what gold is moving, consolidating on a medium term basis. That's what you see. So global markets are um, around the edge. You never know what's going to happen. The US markets, it has shown some reversal, but will sustain or not will be available in the next week. And rupee and crude is danger levels, right? 118 crude is very, very bad. Rupee is, you can see that the rupee, the dollar index is again climbed up after some retracement of 2 weeks again, and the green week is what you see in the dollar index. And USDINR currency pair is showing that there is indecisiveness there, and that indecisiveness is at the very top of 77.8 is really bad, right? So it's a 4.5% crude oil hike and 0.5% of dollar up move, and a flat close and industry close of the weekend rupees. It's worrisome, right? So US market, so all US markets, dollar, and, oil, all these things has to be closely watched as to how it is. If there is big moves that is happening in all this place, then we just can't escape the impact in our markets. So two short side picks I have from the weekly charts is what you see here. Entry has to be on the shorter time frames on daily charts. What I see here is Aurobindo Pharma on the left side and Tech Mahindra on the right side. Aurobindo Pharma is showing some kind of breakdown from the neckline of a head and shoulder candle, and it has already breached that, and momentum on the medium term and the short term is in the bear zones, and trend is already in the bear zones as per the ADX indicator. So clear bearish is evident, and it looks like it can give a lot of very good target. Put a Fibonacci extension from this bottom to this swing low, and then down to this swing low. That would give you an extension on, and that's where you can put the stop losses, and a Fibonacci retracement from this top swing high to this bottom will give you what levels you have to look for the targets, right? So that's Aurobindo Pharma, and Tech Mahindra also is in a trendline channel, and also it has got a breakdown that has already happened at 1558 kind of levels, right? The neckline of the head and shoulder pattern breakdown has already happened, but it's still it's a very, you have to be very careful with this pick called Tech Mahindra. The light is on reversal mode. Entry has to be made only if there is a breach of this previous weekly candle low. That's where the supports get end, and any entry before that may disappoint you, because the good correction of 30% has happened. The US market is bouncing up, and then definitely is going to climb back and then come out of this bearishness. And the neckline is already breached weeks back, 5 or 6 back, and good retracement and fall down has happened, and where it is right now bounced up is a very good support. So we're very careful on this, but still the stock was picked because US market is down last week. Trend is clearly bearish on momentum, also is bearish on the medium and the short term both, and there is selling pressure in the last candle also. You can see that it's an inverted hammer, so probably it is having pressure to maintain the up move. Never know, but you should not enter this stock unless and until you have this support zone of 3 lines that is drawn here and breached. Until then, that's at 1079 breach. Until then, unless that happens, you should not go for a swing trade on this, because it's at the sector has corrected substantially, and then the charts is showing the price at a very good support zone. I don't know why I picked it. I picked it because there is a bearish overall US market view, and then indicators were clearly showing downside moves, and but the thing is, patterns are also showing that. The thing is, if at all there is a down move that has happened, this is going to reward you a lot. Until 947 it can clearly go. So that's Tech Mahindra and Aurobindo Pharma, 2 stock picks. So payoff charts for the indices. Nifty, what you see here is a calendar spread, basically a bull put spread. So you're selling the put at a strike of higher price, and then lower price is bought for the next month, next expiry, right? So you can see 16th expiry is where you're buying, So this could give you an advantage if they spike from this 19 levels towards to the 2025 levels. That kind of weeks or volatility rise happens means we can benefit, and portion size can be as per as per your capital size, right? But you have to exit as soon as you get 1 or 2, 3, 2% max. Should not expect more than that. But yeah, this is a bull call calendar spread that you are seeing there, right? Low risk, probability of profit is very good, 88%, and it gives a very good range. Always calendar spreads and double calendar spread, they give you desired range. Otherwise, you're taking too much risk and you'll have to do a lot of adjustments when the range breaks on either side. Here, it's very less likely to breach the 1650 kind of levels, right? So that's a range that you have. Unless that is breached, then you're in a safe zone. You don't have to make too much of adjustments, and unless you are going to the last expiry day, instead if you're booking it early, then it could give a good risk. It could give a decent profit when you're trading this, right? So it's bear put spread that you say, calendar spread basically. Now to wrap up, what exactly is happening? My view is mild bearishness. Why? Because there's heat of resistance that's clearly there. The bulls got trapped yesterday on Friday. It's a V-shape up move which failed. It's a breakout that failed, and consolidation is what is happening. Although there is small bias of bullishness is there, consolidation is what primarily happening, and big resistance and big traps, and a lot of resistance is there still there. So it's very mild bearish, not clear bearishness, because I know there is a support of the gap that set down the Nifty, and there is a probability that Nifty can consolidate as per the bands. Another expansion on the downside may not be likely. It may be moving down a little down and then taking a support again and then again. So bearishness is not clearly there. But the next few days there may be mild bearishness that may come in, especially in the beginning of the week probably, because the selling pressure is what we see. And VIX is cooled off. That's a good thing, but it's not cooled off much below the 20. It's still very close to that. And then US markets are not great. US markets is also struggling. Right? A lot of negative, global cues are not that great. Crude is rising up like anything, and war is still going on. Rupees weakened, and US Fed additional hikes are coming, and our inflation is US inflation is rising up. So a lot of uncertainty is still there. I just can't help but go with the charts. Right? The positive fact is that we had substantial, very good correction of 17, 19, 15 kind of percentage of correction has happened, and then can still be bounced by people, retail money that's flowing in, and then DAs are buying that support zones. So market is not going to crash is what the indication says now, but we have to be still cautious because uncertainty is all over there. VIX is still at a very high level, and a lot of global cues are not negative. Charts showing big sell-off, like what happened, 3,000 crore sell-off that happened for Fyers on Friday. So that's the risk is all that we can manage, and hedge your positions. We're taking overnight with vertical spreads or counter spreads or non-directional strategies, whatever. But you have to define how much you lose next day. You wake up and see that market is gone against you. Right? You should know how much you lose, and you should still be in the game, right? So levels is what we can. Probability of this reaching that level or this level is all that you can do, right? And manage your risk. Cut short your position size if the VIX is rising up. Right? Mark the levels and then take your positions based on a view on the market. What is the likelihood of breaching this level or that level, right? Downside or upside, right? That's the way you have to play this, and that's a wrap up I have, right? Mild bearishness is a weekly view I have. So I have just for additional information. So the daily analysis is I'm not finding enough time to focus on other things on. Going to the tech side of automating and doing things like that. I'm not finding enough time if I focus on the daily analysis. It was kind of a daily analysis, kind of an exercise that helped me as well, to get prepared for the market for the next day. So I was doing that, but recording and editing eats up a lot of time, and which I don't have right now, and I need to focus elsewhere. And I hope, looking at the previous daily analysis videos, and the analysis remains the same. So if you've seen a good amount of the videos, then you'll get the way of market analysis, and you could do it by yourself, right? And if you have any questions, clarity that is required, then please comment, promote, and give more likes, comments, and subscribe if you like it, right? And pass it on to your friends. We have very few subscriptions. Appreciate your help. Thanks for watching. Happy trading. Happy learning. Bye bye.